What's up everyone, and welcome back to Explain the Charts. Today is November 12th, 2025, and we're taking a deep dive into Ethereum, symbol ETHUSD. We've got a lot to cover, from major news developments and institutional moves to a detailed breakdown of the charts. So let's get right into it, starting with the current events shaping the narrative around ETH. The overall market sentiment is currently shaky, with the crypto fear and greed index sitting at 21, indicating extreme fear. This suggests widespread caution among investors, likely influenced by macro risks and recent volatility. However, despite this fear, some reports indicate renewed buying interest for ETH, particularly around the $3,200 to $3,300 price level. On the institutional front, we're seeing some fascinating and conflicting signals. Last week saw spot Ether ETFs record a significant net outflow of $508 million, hinting that some traditional investors are reducing their exposure. This contrasts sharply with the third quarter of 2025, where these same ETFs attracted a massive $9.6 billion in inflows, even outpacing Bitcoin. Meanwhile, firms like ARK Invest and Bitmine continue to show confidence in Ethereum's long-term potential. ARK recently increased its exposure to ETH-focused assets, and Bitmine has been actively accumulating Ether for its treasury. Now, let's talk about some specific events that have directly impacted the price. If we look back to November 3rd, we saw a sharp drop in ETH's price. This coincided with news of a multi-million-dollar hack on Balancer, an Ethereum-based DeFi protocol, which reportedly lost over $100 million. That event pushed Ether down nearly 8%, breaking below the critical $3,600 support level at the time and adding to the bearish pressure. Adding to the negative sentiment around that period were broader macroeconomic fears, including talk of tariffs and cautionary statements from the Federal Reserve. However, the market has seen a dramatic reversal in the past week. We saw a powerful rally beginning around November 6th. This surge was largely attributed to renewed optimism in the markets, reportedly linked to the U.S. Senate advancing a bill to end a potential government shutdown. As a risk-on asset, Ethereum tends to amplify these market-wide relief rallies, and we certainly saw that play out. On the fundamental side, a major bullish catalyst is on the horizon. The Fusaka network upgrade is confirmed for mainnet activation on December 3rd. This upgrade aims to significantly boost Layer 2 scaling and reduce data costs, which is vital for Ethereum's long-term utility and value proposition. Anticipation for a smooth rollout of Fusaka could be fueling some of the recent speculative buying. Now, let's transition to the charts and see how all this news is reflected in the price action. Starting with the daily chart, we can see the broader context of ETH's performance over the last several months. After hitting a major high back on August 24th near $4,950, ETH entered a significant correction. The price action has been extremely volatile, with a massive drop in early August and another steep decline on September 25th. More recently, we can clearly see the impact of that Balancer hack news on November 3rd, with this large red candle taking the price from above $3,900 down towards $3,600. Following that drop, the price consolidated for a couple of days before the explosive move-up that began on November 6th. This rally was impressive, taking ETH from a low of around $2,400 all the way up to a high of nearly $3,400 yesterday, on November 11th. Today's candle, however, shows a pullback, indicating some profit-taking or renewed bearish pressure after that massive run-up. From this daily view, we can identify some critical long-term levels. There is clear resistance in the $3,800 to $4,000 range, an area that has capped rallies multiple times in the past. The $3,500 level also appears to be a significant psychological and technical hurdle. On the downside, the current price area around $3,200 is acting as immediate support, which aligns with the news reports of renewed buying interest here. If that level fails, the next major support zone sits between $3,050 and $3,100, a previous consolidation area. Below that, $2,900 comes into focus as the next logical target for sellers. Now, let's switch to the 1-hour chart from late October to understand the price action leading into that November 3rd drop. Looking at the period from October 22nd to October 25th, we can see ETH was already showing signs of weakness. The price attempted to hold levels around $3,880, but was met with consistent selling pressure. We see a series of lower highs and a clear downtrend forming on the shorter time frame. This struggle to maintain higher levels indicated that bearish sentiment was building, setting the stage for the larger drop that occurred about a week later. To get a feel for the most recent rally, let's jump to the 15-minute chart, which covers the action from November 6th through November 11th. There appears to be a data discrepancy between our feeds, but analyzing this short-term chart gives us a granular view of the recent upward momentum. What looked like a straight shot up on the daily chart was actually a very volatile grind with significant pullbacks. This indicates a fight between buyers and sellers, not just one-sided bullish momentum. We can identify a short-term range on this chart with support holding around the $3,300 to $3,400 area and resistance being met near $3,600. Let's zoom in on a particularly interesting period within this time frame, the surge on November 9th. As you can see, the price consolidated in a tight range before experiencing a very sharp breakout. This move was characterized by high volume and quickly took the price from the mid-$3,300s to over $3,600 in just a few hours. Moves like this often trap short sellers and fuel further upward momentum, which is what we saw playing out through the rest of that day. Okay, let's switch back to the daily chart and discuss what all this means for the path forward. Let's outline the bullish and bearish cases for Ethereum right now. The bullish case hinges on a few key factors. First, the upcoming Fusaka upgrade is a major fundamental catalyst that could drive significant investment and speculation into ETH. Second, continued institutional interest, even if spot ETFs see temporary outflows, signals long-term confidence from big players. From a technical standpoint, if bulls can defend the current support level around $3,200, it would show that the recent rally has strength. A confirmed break and hold above the recent highs around $3,450 could open the door for a retest of the major resistance zones at $3,800 and then $4,000. On the other hand, the bearish case is equally compelling. The extreme fear in the market cannot be ignored, as it often precedes further downside. The significant ETF outflows last week are a major red flag for institutional sentiment in the short term. Technically, the sharp rejection from yesterday's high and today's pullback are classic signs of exhaustion after a big run. The most critical level to watch is the $3,200 support. A decisive break below this level would invalidate the bullish momentum and likely lead to a drop towards the next support zone at $3,050. If market-wide panic sets in, a move down to the $2,900 level is entirely possible. So, let's recap the key takeaways and what to watch for. The critical support levels to monitor are $3,200, followed by the zone between $3,050 and $3,100, and then $2,900. Key resistance levels are at $3,500, the psychological barrier at $3,800, and the major zone at $4,000. Here are a few unbiased scenarios we might see play out. First, a bullish continuation, which I'd give about a 40% probability. For this to happen, ETH must hold above $3,200 and break cleanly through $3,500. This would be reinforced by positive market sentiment or a surge in ETF inflows. Second, a bearish correction, which I'd also place at a 40% probability. This would be confirmed by a failure to hold the $3,200 support, putting $3,050 in play. Negative macro news or any issues with the upcoming upgrade could trigger this scenario. Finally, a period of sideways consolidation has about a 20% chance. In this case, ETH would likely chop in a range between $3,200 and $3,500 as the market waits for a clear direction. Keep an eye on news surrounding the Fusaka upgrade as we get closer to the December 3rd activation date. Also, watch the weekly institutional flow data for ETFs, as this will give a strong signal of where the big money is moving. That's our analysis for today. We hope this breakdown helps you navigate the Ethereum market. Before we wrap up, a quick disclaimer. This video is for informational and educational purposes only and should not be considered financial advice. The cryptocurrency market is extremely volatile, and you should always do your own research before making any investment decisions. Thanks for tuning in to explain the charts, and we'll see you in the next video.